Trump threatens tariffs on nations with digital services taxes. UK shop prices see the sharpest rise since March 2024, fueled by food inflation. And Norway wealth fund divests from Caterpillar Israeli banks over ethics. Welcome to the Economic Bulletin, and I'm Salma El-Bi'i. And we start off with the United States, where the Commerce Department has reported that core capital good orders, excluding aircraft and defense, increased 1.1% last month, significantly exceeding economists' forecast of an 0.2% growth. The data suggests that businesses are maintaining investment despite economic uncertainties, though analysts note some of the increase may reflect higher prices due to tariffs rather than increased volumes. Shipments of core capital goods, which factor into the GDP calculations, also rose at 0.7%. The report showed mixed signals elsewhere, with overall durable goods orders falling from 2.8% due to a sharp decline in commercial aircraft bookings. President Trump has ousted Federal Reserve Governor Lisa Cook over alleged mortgage application irregularities, marking the first removal of a sitting Fed official in modern history. Cook, the first African-American woman on the board, was accused of listing multiple properties as primary residences in 2021. The dismissal tests the legal boundaries of presidential authority over the independent central bank. Trump cited cause under the Federal Reserve Act, though such action has never been taken before. President Donald Trump has warned countries with digital services taxes that they will face substantial additional tariffs on their exports to the U.S. unless they remove such legislation. In a social media post, Trump accused nations, particularly in Europe, of designing taxes to discriminate against American technology while favoring the Chinese firms. The threat escalates a long-standing trade dispute between the U.S. and multiple countries that have imposed levies on major tech firms like Google, Apple, Amazon, and Meta. Trump also hinted at possible export restrictions on advanced U.S. technology and semiconductors in retaliation. Morgan Stanley has revised its outlook to project a Federal Reserve interest rate cut in September, joining a growing consensus among major brokerages. The shift follows Chair Jerome Powell's perceived change in tone at the Jackson Hole Symposium, where he emphasized growing labor market risks over persistent inflation concerns. The brokerage now expects 225 basis point cuts this year in September and December, following by quarterly reductions through 2026, ultimately bringing the benchmark rate to 2.75% or 3%. This marks a significant change from its previous forecast of no cuts until March 2026. On trade relations, the United States has agreed in principle to exempt Indonesian exports of palm oil, cocoa, and rubber from the 19% tariff imposed by President Trump in early August. Indonesia's Chief Economic Minister Airlangga Hartarto announced the breakthrough following bilateral talks, though a final agreement and implementation timeline remain pending. The exemption, which would apply to goods not widely produced in the U.S., marks a significant concession for Indonesia, the world's largest palm oil exporter and a major rubber supplier. South Korean officials announced progress on establishing a non-binding agreement to define the operation of a $350 billion investment fund pledged in July's U.S.-South Korea trade deal. The fund will target semiconductors, AI batteries, and quantum computing. South Korean officials clarified that the package will primarily consist of loans and guarantees, not equity, contradicting earlier to U.S. claims about profit sharing. A joint task force will develop implementation details, with both sides aiming to sign a memorandum of understanding soon. Moreover, South Korean companies have pledged $150 billion in U.S. investments during the summit between Presidents Trump and Lee Jae-young. The package includes previously announced projects like Samsung's Texas chip factory and Hyundai's Georgia plant, plus new ventures in aerospace, shipbuilding, and nuclear energy. Key deals feature Korean Air's $36 billion Boeing order, Hyundai's expanded $26 billion manufacturing plan, and shipbuilding partnerships to boost the U.S. maritime capacity. The investments form part of a trade agreement that reduces the U.S. tariff threats against Korean goods. South Korea's Hyundai Motor Group has announced it is increasing its U.S. investment commitment to $26 billion, up from $21 billion between 2025 and 2028. The expanded plan includes establishing a state-of-the-art robotics facility with annual production capacity of 30,000 units. The investment boost comes as South Korean companies continue to expand their U.S. manufacturing presence, with Hyundai's announcement following recent major investment pledges from other Korean conglomerates during the week's summit between the U.S. and South Korean leaders. Commerce Secretary Howard Lutnick has confirmed that the United States will formally announce Japan's $550 billion investment commitment in the U.S. later this week. The investment, negotiated in exchange for reduced U.S. tariffs on Japanese goods, will focus on semiconductors, antibiotics, and rare earth manufacturing. Japanese trade negotiators are working to finalize details, including profit-sharing agreements. The deal lowers tariffs on Japanese imports to 15%, but excludes recent investments like SoftBank's $2 billion stake in Intel. President Donald Trump has emphasized U.S. energy resources as a key advantage in negotiations with South Korea and Japan, stating that his country has more oil and gas and coal than any other nation in the world by far.
We're dealing with South Korea, as you know, in Alaska, and we're going to be making a deal, a joint venture with South Korea. Japan is involved also, very strongly involved. So we have Japan and South Korea, and we're actually the closest. You know, it seems like quite far away, Alaska, but actually it's right up the little ocean, right up the little Pacific Ocean. It's actually pretty close, relatively speaking. But we have more oil and gas and coal than any other nation in the world by far. And we're going to use it, and that's the thing that South Korea, I think, most wants from us, I would think.
And for further analysis, we are joined from Washington by the chairman of Links Investment Advisory, Mr. Peter Tanos. Welcome, sir, to Qnews and to Economic Bulletin. Who ultimately bears the cost of these proposed tariffs, do you think, sir? Is it the foreign exporters or the U.S. consumers paying higher prices, or the U.S. businesses that rely on imported components?
Yeah, the jury's still out on that, and nice to be with you again, Selma.
Thank you. Thank you very much.
The fact is that the tariffs that were originally imposed a few months ago have had very little effect on inflation, which is why the Federal Reserve is hinting that they will be able to cut interest rates at the meeting in September. So this has not yet fully played out, but so far so good. The tariff increases have created a large revenue stream into the U.S. Treasury, but have not significantly caused inflation, which suggests that either companies are absorbing it or that tariffs have not been that high.
Sir, history shows that tariffs often lead to retaliation. Do you believe this threat is an effective negotiating tactic to dismantle digital service taxes, or does it actually just risk escalating into a broader trade war that could harm global growth and specifically hurt the U.S. exporters and sectors like maybe agriculture?
Yeah, well, so far, the tariffs have resulted in bilateral mutual agreements with various parties. So there hasn't been much of an issue of trade wars so far. Remember, we negotiated tariffs with Canada and Mexico, although there's a new wrinkle with some of them. A major negotiation took place with the European Union for a flat 15% tariff, plus some other small changes along those lines. But the fact is that many of the tariff issues have been negotiated away. So far, no trade war. We still have issues with China and some other trading partners, India being another one.
Yep.
But we'll just have to wait and see how those work out.
The threat to restrict semiconductor exports is a significant escalation. What would be the immediate and maybe the long-term consequences of the U.S. tech sector, which relies on the global market dominance and scale, if such a policy were implemented, do you think?
Well, this one is also one that is still working out. We obviously export important chips to other countries, but we need to be very sensitive on their use. Likewise, for chips we import. So we need to be very sensitive on how chips are used that may turn around and hurt us, particularly if they're used in defense areas or for spying. So these are some of the things that have yet to be worked out. It could be messy.
Do you think this move signals a shift towards a more aggressive unilateral trade policy, maybe, that prioritizes leverage over a multilateral cooperation? I mean, what are the economic risks and potential benefits of such an approach, do you think?
Well, part of it has to do, again, with the tariff issue. Okay. So it's a combination of, as you point out, economic benefits and security issues. So these, again, are the things that have to be worked out.
Let's move to, on another note, the Federal Reserve's independence is a cornerstone of its credibility. How might this unprecedented dismissal that just happened impact the financial market confidence in the maybe a political nature of the U.S. monetary policy?
Yeah, well, let's first talk about whether or not President Trump has the authority to fire a member of the Federal Reserve.
Yes, please, if you can share that with us, yes.
And so here's the issue. President has the authority to fire a member of the Federal Reserve only for cause. Cause meaning that they did something illegal.
Yes.
That would require them to resign or get fired.
Yep.
The principal issue of American justice is that you're innocent until proven guilty.
Yes.
Now, the Federal Reserve person Cook has been accused of taking, and you actually pointed them out in great detail in your introduction, Selma.
Yes.
Of falsifying mortgage records.
Yes.
She was accused of doing that, but she's not been convicted of any of these things.
It's just an accusation so far.
Say again, yeah, exactly. These are accusations. The president knows very well that he can't fire her just on accusations. It goes against every principle of American justice.
So what actually happened today is not right from a point of view that It has to be somebody who's actually accused and convicted rather than just accused.
Exactly. That's exactly correct. And the president knows this very well. So Cook has filed a suit against.
So she has filed a suit now.
Yes, she's filed a suit about an hour ago.
Oh, okay.
And
in retaliation to that decision.
So the idea, and of course she'll probably win until such time as she is exonerated or convicted of these falsehoods. Yeah. President knows this very well. He's just stirring up the pot, and again threatening Federal Reserve members, which any way he can. You can see all the nasty names he called Jay Powell for a long period of time, which is arguably not presidential, because until he gets what he wants. In September, he will get what he wants because there's a greater than 90% chance that the Federal Reserve is going to lower interest rates in September, as you also reported.
Well, from Washington, that was the chairman of Link's Investment Advisory, Mr. Peter Tanis. Thank you so much, sir, for joining me and for your valuable insights. And now we move to the latest developments from all over the world. A new EY study has revealed that Germany's industrial sector is accelerating its downturn, with 245,500 jobs lost since 2019. The report shows industrial employment declined 2.1% in the second quarter of 2025 to a 5.43 million workers, while revenues fell at 2.1% year-on-year to 533 billion euros. The automotive sector was hardest hit, cutting 51,500 jobs amid Asian competition, electric transition costs, and U.S. tariffs. Exports to the U.S. fell 10%, while China exports dropped to 14%, highlighting growing challenges for Europe's largest industrial economy. British shop prices have increased by 9% year-on-year in August 2025, the sharpest rise since March last year, driven primarily by a 4.2% surge in food prices. The British Retail Consortium reported significant increases for staples like butter, eggs, and chocolate due to supply constraints and labor costs. The data adds pressure on the Bank of England as it battles persistent inflation, already expecting rates to reach 4% in September. Separately, job vacancies fell 1.2% in July, while advertised salaries declined 0.3%, signaling potential labor market softening amid ongoing price pressures. And moving on to Asia, where Reuters has reported that Japan's finance ministry is preparing to request a record of 32.4 trillion yen for debt servicing in next year's budget. A draft document showed that the amount represents a significant increase from the current year's 28.2 trillion yen allocation and reflects growing pressure from rising interest rates. The ministry will raise its assumed interest rate to 2.6%, the highest in 17 years, as government bond yields hit levels not seen since 2008. Japan carries the industrial world's heaviest debt burden at more than twice its gross domestic product size. And Japan's finance minister has expressed alarm over foreign exchange movements after the yen strengthened following President Trump's removal of a Federal Reserve governor. And while declining to comment directly on the U.S. Central Bank decision, Minister Katsunobu Kato emphasized the need for stable currency moves reflecting fundamentals rather than speculation. The remarks highlight Tokyo's concerns about excessive yen volatility impacting its export-reliant economy. The currency strengthened following Trump's announcement, reflecting market uncertainty over U.S. monetary policy direction. And in Oceania, minutes from the Reserve Bank of Australia's August meeting have shown that further interest rate cuts are likely in the coming year after lowering rates to a 3.6% in August. The Reserve Bank of Australia said future easing would be data dependent, with both gradual and faster pacing options under consideration. The decision comes as inflation eased to a 2.1% in the June quarter, approaching the midpoint of the central bank's 2.2 to 3% target range. It noted that while the labor market remains relatively tight, faster cuts might be needed if employment weakens or global conditions deteriorate. Investors expect the next rate cut to be in November. Remittances from the Egyptians abroad reached a historic monthly peak in June 2025. They rose by 40.7% year-on-year to approximately $3.6 billion, up from about $2.6 billion in June 2024. And according to data released by the Central Bank of Egypt, remittances hit record levels during the fiscal year 2024-2025, totaling nearly to $36.5 billion, an increase of 66.2% compared to $21.9 billion in the previous fiscal year. And Egypt's Prime Minister Mustafa Madbouli has issued a decree appointing Islam Azem as the chairman of the Egyptian Exchange for a one-year term. Azem brings extensive experience to the role, having served as the vice chairman of the Financial Regulatory Authority from January 21 until August 2025, where he oversaw the capital markets, insurance, and non-banking financial services sectors. Norway's $2 trillion wealth fund has divested from Caterpillar and 5 Israeli banks due to the ethical concerns over the human rights violations in war and conflict zones. The fund sold its $2.1 billion stake in Caterpillar and a $661 million in combined Israeli bank holdings. The decision followed recommendations from the fund's Ethics Council, which found Caterpillar's equipment contributed to unlawful destruction of Palestinian property in Gaza and the West Bank. The banks were excluded for financing Israeli settlement construction in occupied territories. And for further analysis, we are joined from Cairo by the writer and political analyst, Mr. Ahmed Maharem. Welcome to Qnews, sir, and to Economic Bulletin.
You're welcome. Thank you.
Thank you. What is the potential, do you think, financial cost of benefit to the fund from excluding the large stable companies like Caterpillar? Does divesting on ethical grounds inherently conflict with the goal of maximizing risk-adjusted returns, do you think, sir?
Well, I do think so. I think Caterpillar is one of the most famous, strong, heavy equipment industry in the United States. And most of their products are well known in the Middle East, especially for the construction. A few years ago, it was very known that Israel is relying on some of those heavy equipment, which is supposed to be for industrial and like big, huge construction projects. The Israeli military, either in Gaza or West Bank.
Yes.
So I think there is a wave is coming very soon from Europe to start doing something in order to stop those companies to support Israel in a way and to show how the European countries are strong enough to say sometime to America, you have to do something different in the way you are dealing with Israel.
Yes. Sir, while we have a $2.76 billion, it's quite a significant amount of money, and it actually just represents a very small fraction of the fund's total, which is $2 trillion assets. Do you think this action economically material enough to actually impact Caterpillar's or the Israeli banks' cost of capital or their stock prices, or is it just a primary impact symbolic?
I think all what you mentioned could be considered, but the main target is there is a question mark that European countries, they are against what Israeli are doing in the West Bank and the Gaza people. Not only the European, I think some other countries in the world, they may follow the same scenario, and that will be affect badly, negatively, the economy of the United States, especially in the industrial. And the thing is, America is always feel proud that we are America great again. How it will be great again with such a kind of demolition.
Mr. Maharim, do you think Gaza would benefit from such an action? Would it be useful?
I assume it could be, yes. It is something will start, but we will never know what is the end of that. But I think in the long run, that will be benefit, absolutely.
So to what extent do you think the fund's divestment decision aligning with Norway's official stance on the Israeli war on Gaza have?
Well, Israeli war is costing the Israeli, country as a country a lot of money, but unfortunately they are not concerned about that because there is an open gate. America is financially, to a certain extent or to big extent, are supporting Israel. The way Israel is losing a lot of weapons, they can replace all these weapons. And also the cost of the war since last 2 years, I think Israel by itself, it will never be able to continue unless there is a green line from America and some objective of the American administration for Israel to do exactly what they are doing right now.
And do you think, as the world's largest single owner of global stocks, does the fund's action serve as a powerful signal to other asset managers, potentially triggering cascade of further divestment that could have a measurable economic maybe impact on the targeted companies, do you think?
Well, absolutely, I do think so. It will never be easy to show right now, but with a little bit of time, it will show strongly that it has an effect and impact.
And from Cairo, that was the writer and political analyst, Mr. Ahmed Maharim. Thank you so much, sir, for your insights. And back to our news, and in the tech sector, Elon Musk's xAI has sued Apple and OpenAI, accusing them of illegally monopolizing the AI market. The lawsuit claims Apple's exclusive deal with OpenAI to integrate ChatGPT across its devices unfairly blocks competitors like xAI's Grok chatbot. xAI is seeking billions in damages, arguing the partnership stifles competition, and OpenAI called the suit harassment, while Apple did not immediately comment. The case could test how antitrust laws apply to the emerging AI industry. A German court has prohibited Apple from marketing its Apple Watch as the CO2 neutral, ruling the claim misleads consumers. The decision cited insufficient long-term guarantees in Apple's carbon offset project, eucalyptus plantations in Paraguay, and noted leases for most of the land expire in 2029. The ruling, a victory for environmental group Deutsche Umwelthilfe, reinforces growing scrutiny of corporate greenwashing. Apple indicated it may phase out the label ahead of the stricter EU rules in 2026. And that brings us to the end of our economic bulletin, and here's what we've been covering. Trump threatens tariffs on nations with digital services taxes. UK shop prices see the sharpest rise since March 2024, fueled by food inflation. And Norway fund divests from Caterpillar Israeli banks over ethics. And this concludes our economic bulletin. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. And thank you for watching, and stay tuned for more updates on Qnews.